It's a very close race and I might be losing. Bitcoin is getting very close to the 100K. But have a look at this statistic here. Now this is the Bitcoin price. We are currently at 98,700. And this is the YouTube channel. We are at 98,200 subscribers. If you want to help me in the race, feel free to subscribe over here. But in this video, I don't want to talk about silly things like this. I actually want to talk about potential risks versus reward of Bitcoin. What's currently driving this rally? How much longer will those drivers prevail? And what could potentially stop all of this? And at what price point? Now, probably by now you know about this here. It shows the net flows of the Bitcoin ETF, which are mainly positive now. If we annualize the last 14 days in terms of demand, we've got a projected Bitcoin supply absorption of 8.24%. So if you continue the way we are currently going, we will more than double in the holdings of the Bitcoin ETF in the next 12 months. Now the money is not just flowing in through the ETFs, it's also flowing in through the centralized exchanges. Have a look at this over here. This is the stablecoin market cap over time. So you're adding up the market cap of DAI, Tether, USDC and BUSD over time. And I like this chart a lot because it has very little volatility. We can clearly see if we're currently going down or if we're going up. And currently we are accelerating in our upwards trajectory. Now, how does the stablecoin market cap expand and contract? If you move your fiat currency to a centralized exchange, and that centralized exchange enables you to buy various cryptocurrencies, what the centralized exchange is doing is they send your fiat currency to a custodian, for example, Tether. Tether then takes that fiat currency, puts it in the account, and then issues on the blockchain the adequate stablecoins. You then receive those stablecoins for trading, and we can see whether or not the stablecoin supply expands or contracts through the minting and destroying process on chain. And so when this is going down, then people redeem their stablecoins for fiat. And when this is going up, then people move their fiat into the crypto system. And so in October of last year, we have seen the turnaround. And this was also when I stopped shorting my altcoins. I was shorting a lot of altcoins. I was betting on falling prices of altcoins during this period. And then I started buying a lot of altcoins starting from October of last year. And this is also when I then got heavier into Bitcoin again. And so this is growing very, very fast. This is very positive. So we should see the 100K in Bitcoin soon. Now, what's also interesting is that Bitcoin tends to still outperform the rest of crypto. So usually what we see at the end of a bull market is that the market participants become more risk on, right? They see already that Bitcoin has risen that much, that there might not be that much more upside potential. Thus, people sell their Bitcoin and then potentially parts of those profits get rotated over to the risk on stuff, to the altcoins. And historically, that has happened when Bitcoin dominance was close to 70%. So Bitcoin outperformed everything else beforehand. And then Bitcoin was that high that people rather bought the altcoins. And that's then when the altcoins outperformed a lot. This is what's called altcoin rally. And the Bitcoin price doesn't necessarily have to go down here, right? It's simply just the altcoins that are suddenly outperforming everything else. It's simply they are doing better than Bitcoin. Actually, during this period here, right, between those two red lines, we saw Bitcoin going from 40K to 63K. So Bitcoin still went up by 50%, but the altcoins went up much more, and that's why the Bitcoin dominance went down. Still, we are pretty far away from those 70%. We're currently at roughly 60%. So again, not necessarily a sign that we are already topping at 100K. Now here's a very important point to figure out whether or not it makes sense to take profit. What I like to do, and what a lot of other market participants like to do, is they like to look at Bitcoin relative to the entry position. And they like to look at the allocation to Bitcoin relative to the rest of the portfolio, right? You probably don't just have Bitcoin, you might also have stocks and property and precious metals. And if your allocation to Bitcoin suddenly outgrows your risk tolerance, you might take profit. So you might be starting, say, with 10% Bitcoin allocation. Now Bitcoin doubles and quadruples and goes 5x. Suddenly you've got 30-40% of your net worth in Bitcoin, and Bitcoin already feels that high after this rally. That's then probably when you take at least partial profit. And so it's very important to look at where is currently the market at with the current price relative to the average cost basis. So how much are people actually relatively speaking in profit? If they are a lot in profit, some of that profit might get taken. And so what we've got over here is the market value to realized value Z-score. So it looks at the current price relative to to the average cost basis. And the market in aggregate is almost 3x in profit. But we also put this in relation to the volatility. That's what the Z-score is standing for. So when the prices go super berserk, when they go up and down like crazy, then Bitcoin can temporarily be much higher relative to the average cost basis. When it's very, very calm, very, very slow, then just a little bit above the realized price might already be enough to take profit. That's the idea. So we are adjusting how much the market is currently in profit relative to the volatility. And when we are in red over here, it is time to sell. Currently, we are still rather far away from this. Now, those are exit opportunities that don't happen very often, right? They happen maybe every 4 years or so. And so when we are not that high, we still might go down temporarily by 50-60%, right? This is what happened over here during the COVID crash. The only thing I'm saying is that we are not at peak hype levels now, right? It might feel for some of us like this because there is a lot of meme coin trading going on, but the meme coin market is not representative of the entire altcoin market. Altcoins in general are actually not doing as good as Bitcoin right now. Now let's say you've been a good investor and you have been following the crypto market also during the bear market. So not just now tuning in when Bitcoin is close to 100K, you've actually also bought during the FTX collapse, right? You have bought Bitcoin for 16K, for 17K, for 20K, and now you're very happy to see almost 5x returns. What should you do now? Let's say you do feel kind of over allocated to Bitcoin, right? Let's see your Bitcoin position is huge compared to your stock position and compared to your property. Where are potential short-term exit opportunities? If you don't want to max it out, if you don't want to see the exit opportunity in 3 years, right, when we go in the red area in the market value to realize the Z-score, let's say you wanted to exit earlier, because if now Bitcoin drops suddenly by 40 or 50%, you would be more than unhappy because you're over allocated. Let's say you're in that position. Where is a potential exit? There are several ways to look at this. There are more scientific ways and less scientific ways. Let's have a look at the less scientific one first. What we've got over here is a long-term Bitcoin price chart on a logarithmic scale, right? So on a linear scale, it looks like this. On a logarithmic scale, it looks like this. And it's interesting, right, how the bottoms tend to align very nicely with one another on this curved line. It's also interesting how the tops tend to align pretty well. Now, those are two completely independent lines, and they are simply just curved lines. They're simply just randomly drawn on this chart. There's nothing scientifically derived here. There's no logarithmic regression going on or something like this. But still, it's nice to see that alignment, right? This seems to be almost like a self-fulfilling prophecy. Now, if we zoom into that, right, and we look at where could we potentially bounce, then the answer is over here after another rally of only 18 to 19% at $118,000. Now, I am not saying that we have to bounce from here, right? But I am saying if you're currently over allocated to Bitcoin and you're looking for an exit, selling at say 110K, 112K, etc. is really no shame. Now, I also want to get to the bit more scientific path, especially if you're not yet 5x in profit, you're just slightly in profit, you have joined maybe a few months ago, and you want to potentially ride this wave a bit longer, and you're okay with some drawdown. In that case, there is one indicator that should be extremely useful to you, and that is this line here in turquoise. It's the 120-day simple moving average. So you would be selling your Bitcoin in case we fell from here by 33%, in case we were to close a day below $66,000. So the idea is that we buy whenever we are above the moving average and we sell whenever we are below the moving average. So we follow the trend. And so 120-day, that sounds pretty odd, right? Most people take 100-day or 200-day or 30-day. Why 120-day? That's because of a backtest. It's because of a simulation of buying and selling Bitcoin and trying out all the different kinds of moving averages, all the way from 2-day to 200-day. What historically worked the best? And so I want to share the result over here. And I've done that in the past on this channel, but I haven't done it in the recent weeks. And so I simply want to repeat this. So this is a data set that goes from August 2017 to July 2024. I haven't updated this backtest for a while. but the results don't change that much. We had the same kind of result 1 year ago. And so if we traded according to the simple moving average or the exponential moving average with that strategy that I just mentioned, we get our annualized returns. And I am including trading fees over here, 0.2% per trade. And we go long, so we bet on rising prices whenever the price is above the moving average, but we also go short whenever the price is below. So in the simulation, we bet on falling prices during times like this here. And so we can have a look at what kind of moving averages work the best. But instead of looking at this in a table, we can also plot this on a nice chart. So on the x-axis, we've got the moving average duration. On the y-axis, we've got the annualized performance. In black is the reference point. So that's when we just buy and hold over the time period. In red are the best exponential moving averages, and in turquoise are the best simple moving averages. And what's the best moving average is over here, the simple moving average 120 day. Now there's several interesting things to note here. It's not just the best moving average that's important. What I think is at least equally important is that most moving averages outperform buying and holding. So this tells us if we get this slightly wrong and we take, say, the 100-day simple moving average, we still outperform buying and holding. The strategy in general tends to work. This is just an optimization for the best moving average, but in general, following trends in crypto works. And of course, if you go too long in the moving average, we just approach buying and holding. If we go too short, then we get crushed by the trading fees. And so this is then how that looks like over time, right? On a linear scale. We see Bitcoin in white here, and we see the result of trading according to that 100-day simple moving average here in turquoise. We're starting with 10K, we end up with 180K after just 6 years. Here's the same on a logarithmic scale. So here we can see how nice and constant that growth is, right? So here each horizontal line is a 10x from one another, not a fixed dollar amount. And so this is a simple way to cut losses that statistically worked, right? In case we don't go higher from here, 66K would be the break point. It also means that in case we go down just a bit, but we stay above that moving average, that this might be a nice entry opportunity, because again, the likelihood of going up is higher when we are above the 120-day simple moving average than when we are below. Now for the people that want to go a bit deeper into this topic, right, that want to learn how to also backtest other indicators, or they want to backtest not just Bitcoin, but maybe also Ethereum or other altcoins, there are dedicated Excel sheets, there are dedicated downloads in premium. So that's down below. It's thebitcointrader.com. You can download all those Excel sheets over here. But you don't just have to work with the Excel sheets yourself. There's also a dedicated tutorial course on technical analysis, on how to use TradingView, on how to do backtesting. So again, this is all part of premium. It's not just about backtesting, right? It's also about wallet tracking. I talk about this regularly on this channel. It's also about risk mitigation, portfolio management, all kinds of things. There's more than 100 tutorial videos in total in premium. Besides the tutorials, there's also regular videos on where I currently see the market. Those are called premium update videos. I publish them every 3 to 4 days roughly. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't feel like you learn enough, in case you don't feel you get enough value out of premium, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. Feel free to subscribe. I publish videos like this regularly on this channel. Feel free to also give this a like. It helps the channel grow. See you either in the next video or potentially in one of those premium chats in Telegram. See you over there. Cheers.